L-Odwa tajba, eżiż azzjonisti, għannom ta' sħabi membri tal-Board, is-Sinjura Jackie Camilleri, is-Sur Stephen Paris, is-Sur Keith Busuttil, is-Sur Conrad Aquilina, is-Sur George Kapuros u il-Segretarju tal-Board Dr. Malcolm Falzon nilqakom għal din il-laqgħa ġenerali annwali ta' Harvest Technology P.L.C. Xtaqna li nkunu magħkom illum fiżikament biex naqsmu magħkom l-istorja ta' suċċess li żvolġiet f'din l-azzjenda is-sena li għaddiet. Biex naqsmu magħkom ukoll il-progress inkoraġġanti ferm li għamilna din is-sena fl-ewwel kwart tas-sena. U biex naqsmu magħkom il-ħsieb strateġiku tagħna fuq fejn nixtiequ nieħdu din l-azzjenda fil-futur. Iżda, kif tafu, minħabba restrizzjonijiet tal-COVID attwali, illum ser nagħmlu dan remotament bil-mezzi diġitali għax mhux permess li niltaqgħu bħalma ntqajna is-sena l-oħra. Jekk Alla jrid nawgura li nkunu ikollna l-opportunità fil-futur qarib li niltaqgħu magħkom fiżikament biex niddiskutu u naqsmu ħsibijiet tagħna flimkien. Illum ser inkomplu din il-laqgħa minn hawn bl-Ingliż għal benefiċċju wkoll ta' azzjonisti u anke membri tal-Board barranin. Good morning. Welcome to the 2021 Annual General Meeting of Harvest Technology P.L.C, which is hereby being declared open. Allow me to introduce my fellow members on the board, namely Ms. Jackie Camilleri, Mr. Stephen Paris, Mr. Keith Busuttil, Mr. Conrad Aquilina, Mr. George Kapuros, and Company Secretary Dr. Malcolm Falzon. This meeting will be regulated by the following procedure. Due to the prohibitions and restrictions imposed by the public health authorities in the light of the COVID-19 pandemic, this meeting is being held as a remote AGM in accordance with the provisions of the Companies Act, Public Companies Annual General Meetings Regulations Subsidiary Legislation 386.23 of the Laws of Malta. Accordingly, no votes will be taken in person at the meeting, and instead, the Company Secretary shall read out each resolution as proposed in the notice convening the meeting, together with the results of the votes which have been validly cast by proxy. For this purpose, only those proxy forms which were duly completed and received by the company in accordance with the instructions as set out in the notice convening the AGM shall be taken into account. Out of a total of 22,780,636 shares having voting rights and entitled to be represented at this meeting, valid proxies have been submitted in respect of a total of 18,229,792 shares, and accordingly, the meeting is quorate and can proceed to the business of the day. Any questions submitted in advance of this meeting that are pertinent and relevant to the resolutions put forward for approval shall be read out by the Company Secretary, and the Director's reply to any such questions will be posted on the company's website within 48 hours from conclusion of this AGM. Before proceeding to the resolutions on today's agenda, I would like to invite Dr. Godwin Caruana, CEO of Harvest Technology P.L.C, to deliver a presentation relating to the company's performance and over the course of the financial year ending 31st December 2020. Dr. Caruana.
Mr. Chairman, Directors, Company Secretary, good morning. Let me share my screen. I assume that you can see my screen over here. Good morning. Over the next couple of slides, myself and later on my colleague, Mr. Chris Fenech, who is the Group CFO, will be summarizing some important 2020 milestones for Harvest from a business and financial perspective. I wanted to start off by spending 2 minutes on reiterating what is Harvest, also obviously for those who will be getting to know us for the first time during this AGM meeting. Harvest is a group of technology companies with a passion for digital transformation. Okay? Digital transformation is applied to generating business opportunities, business value through technology. Our strategy for growth is primarily underpinned by 3 key drivers. These are shareholder value, making sure that we meet and exceed performance, growing the business by establishing new areas, strengthening current relationship with clients, with vendors, and also internationalizations. Last but not least is people. At the end of the day, it's all about people, making sure that we have the required skill sets, the required certifications, and also creating an environment for personal and professional growth. As you are surely aware, at this point in time, our performance in 2020 exceeded all our commitments, and I believe that this is a function of hard work and our employee capabilities. Moving on to the next slide. Once again, for the benefit of those who will be getting to know us for the first time, Harvest Technology P.L.C. is a group of companies with a diversified portfolio of businesses, today comprising of 4 companies, basically: PTL, ACCO Limited, ACCO Systems, and Vision. I say today because growth by acquisition, investment, etc., is always on our radar. In brief, PTL is a long-established systems and software engineering company, and with a wide skill set and expertise, active in many industries, including retail, banking, government, health, etc. We have ACCO Limited, again also very active in retail and banking, with a varied product and services portfolio, which includes CCTV, POS, queuing, teller machines, fuel station software, end-to-end security, etc. ACCO Systems, which is our highly renowned payment services company, and with an international footprint, 20+ countries presence, more than 40 acquiring banks, and 200 payment options. We have a core company, which is Vision, which is basically today primarily the holder of the intellectual property of the software of ACCO Systems. What I want to highlight in my next slide is basically that growth is a strategy affected over time. Obviously, it is continuous and it does not happen overnight. At the core of our growth strategy, and there are a number of key transformation drivers. These are making sure that we continuously strengthen our current relationship with partners, with vendors, with clients, etc. Making sure that we widen and transform our products and service portfolio to make sure that these products and services meet the market's expectations, the client's expectations, and provide value-added digital transformation opportunities. We also aggressively pursue internationalization. In this respect, what we normally do is we capitalize on our vendor relationship. We employ vendors as our enablers by making sure that we have the required skill set through certification and build the required trust relationship with these vendors, so to make sure that they select us as preferred partners. This is exactly what we did with the Motions project. Our intention is also, like many others, to become a top employer in this industry. Obviously, the supply and demand when it comes to the engineering, computer science, the information technology disciplines per se is what it is when it comes to the demand and supply. So we understand that it's a question of it's a question of when rather than if that our talent base actually will look into opportunities beyond our organization. So to make sure that we have the required skill set and expertise available to make sure that we meet our objectives, we try to make sure that we have a strong recruitment pipeline in place, and we actually achieve this and make sure that we have this recruitment pipeline in place through the Harvest Technology Academy, which is basically capitalizing on our strong relationship that we have with the University of Malta, excuse me, as well as other academic institutions. So we are constantly on the ground, making sure that we have our ears on the ground to identify those potential future employees which can help us in future growth on our projects. Moving on to some high-level perspectives on key initiatives and achievements during 2020. I'll start off with the Motions project. Though executed mostly remotely, this kept and basically keeps progressing very well for PTL Limited. And even though the pandemic impacted the approach we actually used on how we execute projects on a large scale such as this one, with a big focus again on doing things remotely, we still managed to take this forward very successfully. This has also actually given us the opportunity, experience, as well as insight required to be able to ensure that we can actually perform at scale remotely and deliver similar projects which is basically our intention as we go forward by trying to establish opportunities when it comes to repeatability of the same solution and similar ones. In fact, to this extent, when it comes to PTL specifically, we're also actively looking at the opportunities around potentially establishing our feet on the ground in Mauritius to use that as a base for our effort to internationalize thereafter. When it comes to APCO Limited during 2020, we completed the local bank's Paycom upgrade as well, very successfully at all sites. This was a large-scale project as well, even though it's local. We also implemented a large-scale solar farm CCTV security solution at Banaisa. During 2020 as well, we applied considerable internal focus. This in the context, for example, to make sure that we have the required management information systems in place to make sure that we invest in the ability to integrate solutions as well as to improve our day-to-day operations. When it comes to COVID-19, I'm proud to say that we are actively prepared from day zero to work from home, to work remotely. This is also a function of the group basically being a technology company, so it was relatively easier for us to transition to the new modus operandi. And we were also able to follow the health authority protocols with little impact when it comes to operations. Again, reiterating that innovation is basically a continuous journey. During 2020, we have also continued our modernization effort in various constructs and applying leading technology where it makes business sense. We don't employ or implement technology in our products and services just for the sake of it. We make sure that this new technology actually brings value to our product and services portfolio. When it comes to the fuel station software, for example, besides adding 8 more fuel stations during 2020, and we're also looking at implementing actually 4 over 2021, we have also made considerable investment by extending the capabilities of the software, for example, by being able to interface directly with the tank gauges to provide both detailed data and insight related to the fuel tank levels. Furthermore, on the same software, when it comes to its roadmap capability, we intend to implement multi-site integration, as well as we are also actively looking at the opportunity to productize it and internationalize it. We believe there is a lot of potential in this respect when it comes to the fuel station software. We have also brought fresh upgrades to key solutions such as the Farm of Your Choice software, e-prescription software, as well as the AGM software, with leading technologies such as artificial intelligence, for example. Again, where this technology actually makes business sense. PTL Limited has in fact also been awarded an e-government tender for the support of the multinational police software, together with a number of opportunities around support as well as software engineering enhancement to the major software information systems implemented at the Malta Police Force. When it comes to our current payment gateway, we're working obviously to making sure that we keep our current platform up to date. We're also investing into coming up with a new version, which will be fully compliant with the directives established by the EU PSD2, as well as stay as front runners when it comes to the feature set of the payment gateway. And to be able to scale at the rate also mandated and in the direction required. We have also re-architected the basic payment gateway, the core payment gateway, in a virtualized appliance construct. This will allow us to basically have as many virtual instances as possible as we need, as also giving us the flexibility to actually segregate by specific customer needs, by risk profile, risk appetite, etc., etc. For the new version, what I woon like to say as well is we're also making sure that we improve a number of key elements, such as, for example, seamless onboarding, automation, anti-fraud, AML, etc., etc. Also adding new value-added features to the product as we go forward. As already hinted as well, we're also looking into the further opportunities around the PSD2 directive EMI models to make sure that, again, we're in the front line when it comes to the features offered by the payment gateway. These were just a couple of our achievements during 2020 and from a business perspective. As we move forward, I would like to introduce Mr. Chris Fennec, who is the CFO for the group, who will give us a similar perspective from a very high-level perspective of the financial view. Chris?
Thank you, Godwin. Good morning. So we'll be going through the financial highlights for financial year 2010-20, comparing the performance to prior year figures as well to what we projected in our prospectus, which was issued in November 2019. We start off with the consolidated income statement. As you can see, revenue earned during the year amounted to 19.2 million. Here we see an improvement of 3.2 million when compared to prior year. This is mainly coming from the project which was executed in Mauritius by P.L.C. Limited. During these past few years, we have worked hard to change our model from a product-based model to a service-based model. The result of this is that we are earning better margins on our revenues. As one can see, the EBITDA margin in 2019 was 24%. This improved to 28% in 2020. EBITDA earned during the year was 5.4 million. Profit before tax reached 4.5 million. Again, the margin improved from 19% in 2019 to 23% in 2020. In absolute terms, we improved the net profit before tax by 1.5 million. Moving on to the next slide, so this 1.5 million improvement in net profit before tax split by segment. From a holding company perspective, we incurred less administrative costs at holding company. Now we have our own structure and we are no longer dependent on the majority shareholder like we were in the beginning of 2019. Last year, in 2019, we also sold one of our subsidiaries at a loss. So obviously, this did not occur during 2020. Our operational companies, the payment processing companies, had a very, obviously, ecosystems had a very strong performance during the year, which contributed to 64% of this improvement in profitability. Same goes for Eco-Limited and PTL, the retail and IT solution segment, contributed to 25% of this improvement, particularly from the project which was executed by PTL in Mauritius. In this slide, we are comparing the performance of 2020 to what we had projected in our original projections. We have a negative variance in revenue of 2.1 million. There again, in 2020, we had planned to finalize the installation of the hardware and software in Mauritius. Due to COVID, we had some delays, so this revenue will now be recognized in 2021. Same goes for the profitability arising from that project. But from an EBITDA perspective, we improved by 1 million, even the margins from 21% projected to 28% actual EBITDA margin for 2020. Profit before tax, 4.5 million compared to the 3.1 million in our projections. Moving on to the balance sheet of the group, we closed off the year with a total assets of 20.6 million. The main components, our assets are mainly composed of the goodwill, the right of use asset, as well as the intellectual property, which is recognized as an intangible asset under AGM. Liabilities, 8.5 million. Again, the main components are the lease liability and the related party loan, which is at year-end stood at 500,000. Net asset value improved from 10.4 million to 12.1 million. Obviously, due to better profitability, net less the dividend which were paid during the year. Cash flow. The improvement in profitability led to a free cash flow in 2020 of 3.5 million. Financing activities during the year, we paid 1.3 million in terms of dividends, and we paid the related party loan of 1.2 million. Closing the year with a very healthy cash balance of 2.4 million compared to the 1.8 million in 2019. Next slide. This is the dashboard of our group. As one can note, all KPIs are very healthy. Starting off from the return on equity, we improved by 5% over last year. 25% return on equity for 2020. During both years, we had a healthy current ratio. The gearing ratio again decreased due to the repayment we did during the year. The gearing ratio as at year-end was 7%. The improvement in profitability led to an improvement in the earnings per share. Earnings per share for 2019 amounted to 9 cents 17. For 2020, this improved to 13 cents 35 per share. Some saving points for 2021. Some weeks ago, the Board of Directors declared a final dividend for financial year 2020 of 2 cents per share. This brings the total aggregate dividend for financial year 2020 of 6 cents per share. So here again, we exceeded our commitments and paid this dividend for the year 2020.
Thank you. I'll pass again the floor to you, Mr. Chairman.
Thank you very much, Godwin. Thank you very much, Chris. I now propose that we move on to our business for this meeting and proceed to the first resolution on the agenda. I therefore ask the Company Secretary to read out the first resolution.
Thank you, Mr. Chairman. The first resolution reads as follows: that the audited consolidated financial statements of the company for the financial year ended 31st December 2020, together with the Director's report and Auditor's report thereon, be hereby received and approved. For the purpose of this first resolution, I would invite the company's auditors, Grant Thornton, to read the Auditor's report.
Good morning. Good morning, everyone. So this is Grant Thornton's auditor's report for that is addressed to the shareholders of Harvest Technology P.L.C. We start with our opinion paragraph, where we state that we have audited the financial statements of Harvest Technology P.L.C. and of the group of which it is the parent, set out on pages 31 to 92, which comprise the statements of financial position at the end of the year and the statements of profit or loss and other comprehensive income, statements of changes in equity, and statements of cash flows for the year ended, and notes to the financial statements, including a summary of significant accounting policies and our explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the company and the group at 31st December 2020, and of their financial performance and cash flows for the year then ended in accordance with IFRS, as adopted by the European Union, and have been properly prepared in accordance with the requirements of the Companies Act, Chapter 386. Our opinion is consistent with our additional reports to the Audit Committee. So therefore, our audit opinion is a clean opinion. Regarding our basis of opinion paragraph, we basically state our responsibilities and that we have complied with the IASDA code together with the ethical requirements of the Accountancy Profession Act. We have therefore fulfilled our ethical responsibilities in accordance with these requirements. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. The financial statements also include the fees that have been charged by us to the group. Moving on to the key audit matters. The key audit matters mainly related to the goodwill of the group and the investments in subsidiaries. Key audit matters are those matters that in our professional judgments were of most significance in our audit of the financial statements of the current period and include the most significant assessed risks of material misstatements. Goodwill and investment in subsidiaries are very significant to these financial statements. Will amount to 7.4 million. And also, we also report that we have not found any particular difficulties in this area. And in addition, we have also involved our professional teams in the assessment of the goodwills and management assessment of the same for these financial statements. No issues have been found in that respect. And further on, we also report the key audit matters on the investment in the company's subsidiaries, which amounted at the end to 11.12 million. Moving on, we also make reference to the information given in the director's report, and that we state that the director's report has been prepared in accordance with the Companies Act. Regarding the responsibilities of the directors, we state the responsibilities of the directors of the group, and our responsibilities are listed further on in our auditor's report, as has been stated earlier, with respect to our ethical requirements and other requirements that we have as auditors of the group and the company. Lastly, we also provide further information on the statement of compliance with the principles of good corporate governance. We read this report and basically we observe whether this is consistent with the other information in the financial statements. We do not, however, provide any assurance on the content as is standard. And our other methods on which we are required to report by exception, whereby we have also responsibilities under the Companies Act to report to you if, in our opinion, adequate accounting records have not been kept on, or that returns adequate for our audit have not been received from branches not visited by us. The financial statements are not in agreement with the accounting records and returns, and whether we have not received all the information and explanation we require from our audit, and certain other disclosures in the director's remuneration specified by law are not made in the financial statements, giving the required particulars in the report. In these areas and with in this respect, we have nothing to report to you in respect of these responsibilities. We also report our audit tenure, and we basically report that we have been appointed as auditors for an uninterrupted period of 5 years. The audit report has been signed by Mark Bujek, Department on the Audit, on the 6th of March 2021. So that concludes our presentation of the audit report.
I thank the auditors and the audit committee, and I now ask the company secretary to read out any questions submitted by members in advance of this meeting that are pertinent to the resolution. Company secretary.
Thank you, Mr. Chairman. I can confirm that no questions have been submitted with respect to this first resolution, and I can proceed to announce the results of this resolution as per the proxy forms which have been submitted in advance of the meeting. The number of votes in favour were 18,329,792, with no votes against and no abstentions. Accordingly, the resolution has been unanimously approved and duly carried.
I now ask the company secretary to read out the second resolution.
Thank you, Mr. Chairman. The second resolution reads as follows: that the aggregate of the net interim dividends declared and distributed by the directors on the 28th July 2020, amounting to €546,785 or 0.024 per share, on the 4th November 2020, amounting to €364,490 or 0.016 euros per share, and the 26th March 2021, amounting to €455,613 or 0.0818 euros per share, amounting to an aggregate net dividend for the financial year ended 31st December 2020 of €1,366,888, equivalent to 0.06 euros per share, be considered the aggregate net final dividend for the financial year ended 31st December 2020, and such aggregate net final dividend be and is hereby approved.
Company Secretary, were there any questions submitted by members in advance of this meeting that are pertinent to the resolution?
No, Mr. Chairman, no questions were submitted with respect to this resolution, and the results of the votes cast for this resolution were as follows. Number of votes in favour, 18,329,792. Votes against, nil. Abstentions, nil. Accordingly, this resolution has been unanimously approved and duly carried.
I now ask the Company Secretary to read out the third resolution.
The third resolution reads as follows: that the appointment of Grant Thornton as auditors of the company be hereby approved, and that the Board of Directors be hereby authorised to fix their remuneration.
Were there any questions submitted?
No questions were submitted with respect to this resolution, and the votes cast were as follows. Votes in favour, 18,329,792. Votes against, nil. Abstentions, nil. Accordingly, this resolution has been unanimously approved and duly carried.
So we now move on to the fourth resolution. Company Secretary, please.
The fourth resolution reads as follows, that for the purpose of Article 21.1 of the Articles of Association of the company, the aggregate remuneration that may be paid to the directors of the company for the financial year ending 31st December 2021 be hereby approved and fixed at €150,000.
Any questions submitted?
None, Mr. Chairman, and the votes cast on this resolution were as follows. Votes in favour 18,329,792, votes against nil, abstentions nil. Accordingly, this resolution has been unanimously approved and duly carried.
At this point, I invite the Company Secretary to explain the concept of the advisory vote on the remuneration report of the company and to announce the results of the advisory vote.
Thank you, Mr. Chairman. So this is the first time that this resolution is being put to the vote of the shareholders. In light of developments in our law, which resulted in the obligation of the company to draw up a remuneration report in accordance with the remuneration policy, which was approved in its annual general meeting held on 30th of July 2020. Accordingly, this is the first annual general meeting at which the company is required to put forward its remuneration report to the members of the company. In view of the fact that the company qualifies as an SME in terms of Directive 34 of 2013 of the European Parliament and of the Council of 26 June 2013 on the annual financial statements, consolidated financial statements, and related reports of certain types of undertakings, the company is not required to hold an advisory vote on the remuneration report of the most recent financial year, where, as an alternative to holding such an advisory vote, it elects to submit the remuneration report for discussion in the annual general meeting. In light of the fact that the 2021 annual general meeting is being held remotely, the board of directors of the company elected to nevertheless hold an advisory vote on the remuneration report relating to the financial year ended 31st December 2020. This whilst reserving the right to opt for a discussion as provided for by the law rather than an advisory vote in future general meetings which are not to be held remotely, and obviously for so long as the company qualifies as an SME in terms of applicable European legislation.
Were there votes?
There were no questions which were presented with respect to the remuneration report, and the result of the advisory vote was as follows. Votes in favour 18,329,792, votes against nil, abstentions nil. Accordingly, the advisory vote on the remuneration report for the financial year ended 31st December 2020 has been unanimously approved and duly carried.
Before concluding today's meeting, I would like to ask the Company Secretary to inform shareholders on the appointment of directors.
Yes, thank you, Mr. Chairman. So, as the shareholders know, no election of directors was held in this annual general meeting. In terms of the Articles of Association of the company, the present non-executive directors of the company are entitled to continue in office until such time as they are obliged to resign in terms of the rotation policy stipulated by the Articles of Association of the company. The 4 out of the 6 directors which were not affected by the rotation procedure stipulated in the Memorandum and Articles of Association of the company were Mr. Conrad Aquilina, Mr. Keith Busuttil, Ms. Jackie Camilleri, and Mr. Stephen Paris. On the other hand, Professor Juanito Camilleri, as the most long-standing director on the board, and Mr. Georgios Kakouras, who had been co-opted as a director of the board during the past financial year, were obliged to retire from office at this present annual general meeting in accordance with the procedure stipulated in the articles. In line with the said articles, the nominations committee was due to receive nominations for the filling of the posts vacated by Professor Camilleri and Mr. Kakouras. 2 valid nominations were received in respect of Professor Camilleri and Mr. Kakouras. Both their nominations were unanimously approved by the nominations committee appointed by the board of directors of the company. Accordingly, in light of the fact that no member of the company holding an aggregate more than 10% of the nominal value of the shares having voting rights in the company made a request for an election to be held for the appointment of directors. Accordingly, the 2 approved candidates, that is Mr. Kakouras and Professor Camilleri, are automatically to take office as non-executive directors of the company. As a result of what I have just explained, no election of directors will be taking place at this meeting, and the board for the coming financial year will be constituted as follows. The board will be composed as follows until the next annual general meeting. The board will be composed of Mr. Conrad Aquilina, Mr. Keith Busuttil, Ms. Jacqueline Camilleri, Professor Juanito Camilleri, Mr. Georgios Kakouras, and Mr. Stephen Paris.
Ladies and gentlemen, the business of this meeting has been concluded. The recording of proceedings will be made available as from 1400 hours today, the 7th of May. And the report on today's proceedings will be published on the company's website within 48 hours. At this stage, I declare this meeting closed. On behalf of my fellow directors, I thank you for your support and for the confidence you have shown in Harvest Technology P.L.C. Signori, grazie ħafna. Il-meeting issa għala.